not wearing the official Tasty uniform?
Oh, yeah. I mean, we'll let you slide like one time, just on the basis of, you're traveling, your first time with your new hands. Like you get a first time with your new hands exemption, but
it better be fixed by Monday.
Yeah, and normally the funny thing is normally they reserve it for the boomers like me. We're on a different computer, we're incapable of getting the right backgrounds, but usually, millennials like you should know better. Yeah.
See, I think in your mind, millennials still means, like young guy. Millennials are 40-year-old. I think everyone forgets that. Gen Z is the young,
I understand
the 20-year-olds now.
No, I get that. I still think that millennials should know how to put on a virtual background.
All right, my friend.
I mean, if you want to trade, there's something that says, "Hey, I want to learn how to trade, so I got to have a virtual background."
They say you can read the tea leaves of the market, or you can learn how to apply a virtual background, but you cannot do both. Tom Sosnoff, last week, the Russell was the the strong one, up a tenth of a basis point, but it was. You get what I'm saying. All relative.
This week, there's a very. I have a clear. I'm
got a
scared
vision.
How clear my vision is.
Oh no!
I'm scared how clear my vision is for this week.
All right. Well, last week S&P's down 1 1/3. Nasdaq was the weakest one, obviously down 1.5%. Are you going to give your premonition off the top of the show here, Thomas?
Yeah, you got to be short. I mean, I went home short S&P's long bonds. The long bond play was a disaster, but I think it was just. I think somebody puked on I think they puked out somebody in the close. I think bonds are going to be up big this week, and I think S&P's could be down big. So I'm putting my money where my mouth is.
As the trader side of me really likes the long bond play. As painful as that is to say, and as much as many fiscal problems as I know that we have, the trader side of me says at 116, come on.
Yeah, I mean got to. Oh, they're going to be up a point tonight. Oh, they're up 20 ticks.
Yeah.
And anyway, that 20 ticks is really. They were trading 116.16 on the close. I think the low I paid was 116.18. Now they're a point higher tonight on the bonds, and S&P's are open down 9.
Yeah, the Russell's the laggard here, down 0.5% already.
The Russell. Usually with the bonds up, the Russell should outperform, but we'll see. Yeah, this is one of the weaker openings. Interesting opening too across the board. I mean, crude oil up $1. Huge. Looks like. Another thing that we definitely have on is we're short U.S. dollar. It looks like the U.S. dollar is down pretty good tonight. So I think we should just close everything up, go to the cage right now, and call it a night. This is one of these openings that if you're in Vegas, you go, all right, just take our chips off the table. Let's go to the cage, cash everything out, and have a good time tonight.
I guess, the normal song and dance is to talk to you about all the big movers from the last week, but I kind of feel like that would be. That's not the move this week. The move this week is forward thinking. So I'm curious, Tom, you've been through a lot of these elections. How in your mind, should a trader try to care or guess or position around the candidate, or how exactly are you positioning through this week?
No, I actually just wrote my cherry bomb for tomorrow, and I covered this topic. And I'll tell you a little bit about how I covered it, because I laid out 3 ways to play the election. And none of them have to do
up, down, or sideways.
No, not at all. Not at all.
Okay.
And I think it's an interesting discussion that I was going to say with Tony tomorrow, but I think we can have a little bit of it tonight. Because one of the things that I like to say is that if you knew who was going to win the election, like if you knew right now, and let's be fair, the betting markets have gone crazy this weekend. And
the gamma in the next 48 hours.
One of the sites has Harris up, another site has Trump up, one of the sites has them even. It's all there. Everything's going to go off at 50-50 on Tuesday night. That's what I believe. So regardless of who you think is going to win, even if you knew who was going to win, I don't think you would know how to trade that. So in other words, I don't think there's a trade to be made based on who you think is going to win, because I don't think you would know what the market's going to do. So if you believe in that, which I wholeheartedly believe that if I knew who was going to win the election, I wouldn't know what trade to make. So because of that, I think there's three ways to play this market for Tuesday. I'm sorry, for Wednesday, because Tuesday is going to be a non-event. Number one, you can um, you can take some of your positions off and you can reduce your risk. You can essentially say, I think it's going to be something big is going to happen. I don't know what it's going to be. I'm going to reduce my size and I'm going to wait for a post-election results opportunity. And then I'm going to have a lot of dry powder. That's number one. You can reduce your size. To me, that is the most conservative way to play this. Then there is the moderate way, which essentially says that you keep most of your positions that you currently have on and your assumptions and everything else in play, but you define a bunch of your risk. So you take some outlier risk off the table, but you keep all your plays on. So the number two is the moderate way to play it. Mm-hmm. Defined, but keeping the risk on. Number one is you reduce your risk and you wait for a post-election play. Number two is you define some of your risk, but you leave all your trades on and you keep your assumptions in place. And then there's number three, which is how I'm going to play it, because I think that we have had some extraordinary moves and there is a lot of price extreme right now in a bunch of different things. There's price extreme in the market itself. We're right off of record highs. There's incredible price extreme in the bonds. We've sold off, almost 10 handles from the high since they lowered interest rates. You would think they raised it, but they lowered it. And things like the U.S. dollar and certain different sectors have had extreme moves. And in the case of the U.S. dollar, I think it's way overbought. So I think there are a couple of markets that we're at extreme. We have price extreme. And I think the pot odds play is to fade the price extreme. So I think it's buy the rumor, sell the news. It is the most aggressive play. It is not for everybody, but it is a pure contrarian fade of everything that's happened leading up to this election. If you're a trend is your friend person, if you're a trend is your friend trader, you could not do that. It's not in your blood. You are not capable of doing that. If you're a contrarian trader, it's something that I think should be really appealing to everybody that's a contrarian trader, which is you just fade everything that's happened. It means you're not taking any stance on who's going to win. You're just saying that whatever the market was kind of anticipating or whatever the public was doing, you're taking the opposite, assuming for a reversal after the election. And I like that play the best. And I think that gives you asymmetric upside and decent pot odds.
I like that too. So let me give you some instruments that I would think are at price extremes, and you tell me how you play them. So I think NASDAQ then would be, in my opinion, even though it eased last week, still at a price extreme. You agree?
100%. It's over 20,000. Absolutely.
Okay. Then bonds. This includes notes as well. Again, long term, it could be whatever. We're going to 5% in the 10-year, but in the short term, bonds are on the short side.
Bonds are a no-brainer to me. Yep.
Meaning bonds rally, in your opinion. You've already said this one, but the dollar has been rallying. It's been very strong. Your position, and then this, I'm guessing against all cross currencies here, you would be fading that and playing a weaker dollar.
Yeah, totally.
So then this is a weird one. How do you play crude oil? It's mid-range. However, to me, crude and bonds are singing a very different song. Do you not look at crude oil as something?
Crude oil has nothing. Crude oil is an outlier in the sense that it's the only true geopolitical play on the board, global geopolitical play, and it's a short premium play no matter what you do. I don't think that you should be directional in crude oil. I mean, obviously it's at the lower end of its range for the last couple of years, but I think you can't play it directionally here because it's had a nice rally already. I think it's a short premium play. Just go wide.
Okay.
Well, I think it's the only geopolitical play on the board.
I don't disagree. So then this one, it's going to be hard for you to say it's not at a price extreme. And I'll be interested how you think about this one, given a weak dollar thesis. So gold is likely at a price extreme from your point of view. You fading this one too?
I am not fading gold because I don't like trading gold as much, but I do believe it's at a huge price extreme. I just think bond stocks and dollar are more interesting. I also think there's one other thing that if you're interested in it, you can't short it. But I think that digital assets here, specifically Bitcoin and to a certain extent ETH, I am going to sell a little bit of mine on Monday and Tuesday, a little bit as a defensive hedge because I think those are at the top end of the range. I think they've had a little Trump bump in there, and I think they're at the high end of the range, and I'm going to lighten up a little bit. I haven't sold any yet.
Oh wow! Look at you. You were ruffling. You were ruffling all the feathers tonight. Okay, but help me understand why a guy like you will stand in front of Bitcoin,
I
given
don't
its.
really, because I'm
Hold
only.
on, hold on. Hold on.
Yeah, I'm not getting short.
Given all the beta and volatility there, but you
Yeah.
don't like standing in front of the gold trade. Help me understand why yes to one and why no to the other.
First of all, because I'm long Bitcoin, so I'm not standing in front of it, I'm just taking profits.
Okay, fair.
I didn't buy any up here. So wherever I bought it in the 30s, 40s, 50,000s, 60,000s, wherever it is, it's nowhere close to here. So whatever my average price is, it's got to be, close to $20,000 lower than here. So I'm just taking profits. I'm not getting shorted at all. In gold, I don't have any long gold or long silver. So in gold, the difference is I'm not really that interested in getting shorted. I think the other plays are better.
All right, then one more question. The implied move that I saw on the plane was a little over 2% through now. At the time, I think that was
125
Friday,
points. 125 points.
It was 123 when I saw it. So Friday through Wednesday.
Yeah.
So let me ask you, given your directional opinion on all these things, you holding it through the week, or you get your move, you're closing up shop, taking profits as soon as you get it? I expect a crazy move. Maybe we stay in 2%, but I think 2% might be cheap, given the range.
Let's put it this way. I don't think, given the level that we're at, I don't think 2% is a lot. But one of the most challenging things about trading is if you do have a winning position on and you stick and you are a very mathematical or quantitative trader like we like to think we are, and you want to default to the mechanics and to the numbers, then you have to take some profits if you're right and you get a 2% move, you have to take some profits because otherwise, you can't trust the numbers sometimes and not trust the numbers other times. Doesn't mean you have to take everything off. Doesn't mean you have to close out everything, but you got to trust your numbers. It's not like trusting your instincts. It's just being true to the mechanics. So I think that in this case, you got to take something off if it goes your way, But I would caution people as to thinking, again, I don't think anybody knows what's going to happen regardless of. I mean, you could be 100% sure Trump's going to win. You could be 100% sure Harris is going to win. But I don't think you know what's going to happen if either of those people win.
Do you think anything else Do you think anything else matters this week? In other words, the macro calendar, earnings. Do you think they're in play?
Earnings probably not, because all the big kids are done, I think. But I do think that, isn't it Thursday when the Fed does rates?
Yeah.
I think the Fed announces rates on Thursday. And
the 7th. Yep.
Yeah. And so, which is weird because usually it's on a Wednesday, right? So Thursday is a very strange time for the Fed to announce, a rate cut. And I think a rate cut here is going to be hotly debated among the Fed governors because everybody's expecting it. It's like, 70, 80. I don't know what it is right now on the CME, rate indicator, but it's got to be.
I'll check it. It was like 90. It was like 90 something percent.
Yeah. It's a ridiculously high number. But with the bonds trading, if the bonds go up from here, then the Fed's decision is easy. If the bonds rally up to 118, 119 over the next couple of days, the Fed has a no-brainer. They can lower it a quarter point, and it's a no-brainer. But if for some reason, whatever happens on Tuesday, sends the bonds lower down into the 115 or 116 handle, I don't think the Fed can lower rates. And so Thursday then becomes a really tipping point for the market. And so I know it's 97%, but they weren't. I just don't think people are taking into consideration where everything's trading right now. The 10-year was under 110 on Friday. These are weird numbers to be lowering rates into the middle of a bond crash.
That's right. You're telling me, my friend.
Hey, let's keep it going. Let's go to Pete.
I want one more before you get Pete on, and I'll make it quick. When do you think we're going to know the winner? Do you think we're going to know this week?
Tuesday night.
Oh, I think you're crazy. No
Oh,
way.
come on. First of all,
I'll bet you.
we're calling the winner on Tasty at 8 o'clock on Tuesday night. So that's all that really matters is we will call the winner, and you're going to be part of that. We call the winner on Tuesday night at 8 o'clock. We might run a few minutes late, so maybe it's 8:10, but we'll be the first ones to call the winner.
I want no part of that.
What?
I want
It's your
no
legacy,
part of
dude.
calling the
It's your
winner.
legacy.
Not
It's your
this
legacy.
one, not this
You're going
one.
to live for another 50 years. You're going to be the guy that goes, I've called every election right for 44 years. I'm Victor Jones.
Is that's your impression of me? All right, let's get Pete Molmet on here, everybody.
No, but you're going to have a winner.
Moving.
Election integrity is too important to our democracy. What happened in 2020 is never going to happen again. And this time there'll be a winner declared. I'm not saying there'll be a concession on Tuesday night, but there will be a winner declared on Tuesday night. 100%.
Pete, how you doing, my friend?
I'm doing great, guys. Good stuff. Yeah, it should be an interesting week. Absolutely.
Yeah, good start to the show tonight. A heated discussion. I like it.
So you heard Tom come hot off the top of the show about where he would be fading. Where do you agree, and are there any points of disagreement for you, Pete?
No, I actually, for the most part, I agree with everything. It's the dollar's taking a little bit of a beating tonight with the shift in the predicted markets and some of the polls that came out over the weekend. So that's interesting to see. But again, we're rallying in euro from 108.5. We're rallying from dollar yen at dollar yen's coming off from 153. Remember, we were in the mid 130s dollar yen during the carry trade unwind back in August. So, these are markets that are Euro's cheap, sterling at 129, Aussie at 65 cents. Those are all really cheap markets. I'm not so sure we're going to see a huge bond rally. That's the only difference. I think the bonds we've given back a lot of ground on the idea that Trump's going to win. So the bonds are cheap down here at 117. But I think depending on how this goes in terms of the early parts of the 820 call is going to be an interesting dynamic, because depending on the way they're counting ballots, it's going to be tough to see at 820 whether or not you're going to. I mean, you've got 3 states that can't start counting at anything that was mailed in until the election closes at 7 o'clock at night. So
Georgia said they're going to take until Thursday, Friday already. The high potential.
All right. So I'm tired. I don't want to listen to you guys. There'll be a decision on Tuesday night. I mean, let's stop speculating on the 8 days.
But you know what it's going to give you, though, Victor, is I think depending on that, you're going to get. I think you may get the opportunity to buy bonds really cheap, and I think we're going to test the lows in bonds. I agree with you. I think we've had a huge move down in bonds. They're awfully cheap right now, but I think you may get a little bit of wiggle on that Tuesday night, depending on how things go. And I want to trade both sides of it. And I think Tom summed it up wonderfully when he said, he wants to kind of keep some of his positions of a certain size so he can trade the back and forth. I think we're going to get some really good back and forth. The one thing I'll look to do, though, that's a little different is I think gold's overdone here. I think we're starting to run out of gas, and any rallies in gold, I think are going to be interesting ones where with volatility where it is in gold and the underlying, and I don't want to buy silver against it. I want to put copper against it. I just want to take some short gold here, whether both in terms of premium with some short calls and short futures here. If we get any kind of flutter up to 2760, 2770, I think that's an interesting spot for me. It'll be interesting to see I don't think this is going to be a couple of days where you try to leg into NASDAQ against Russell. You're going to have to kind of wear that if you want to going into it. But I think there's going to be good two-way spots to do that. You brought up an interesting question about crude. I think we're kind of trapped, and there's still geopolitical hang-off. It's not the one that's going to give you the interesting back and forth. So I'm going to watch the bonds. I'm going to watch the 2 years too to see if we get some movement back on that. That spreads come back in. It was in about 8 or 9 basis points until we saw the numbers on Friday. Yeah, there's 100% or 99% chance, basis the Fed watch tool, they're going to cut rates on Thursday. I think I'd be very surprised if they didn't.
Of course. I mean,
Do
they're
you
going to
think?
cut
Do you
rates.
think?
They're
Yeah,
going to cut rates.
irrespective of if we're at 116 or one, I don't think that's going to change their mind in terms of cutting rates.
So regardless of what's going on with the election and you don't think that's going to have any bearing to whether or not they move forward with monetary policy?
No, and I think honestly, Victor, at this point,
I think so
the
too.
25 basis point rate cut is so boiled in.
It's baked in.
It's not what's going to be driving the long end of the curve. So notes and bonds are going to have a life of their own, depending on some other things right now. And really, if they do get some, I know, Tom, you feel pretty strongly we're going to see a 2-3 point rally in bonds, depending on what it goes. If they really start to challenge some of these longer term shorts, it's going to be an interesting dynamic. But I think there's going to be stuff to trade on both sides. So
yeah, I think no matter who wins, bonds are going to. I think if Trump wins, bonds are going up to 119 at least, maybe 120. And I think if Kamala wins, they could get up to 121, 122, just as a trade. I mean, I think that's where the most asymmetric opportunity is. But I mean, every marketplace is.
Am I the only one who thinks that from the bond market's perspective, these two are the same person?
What two?
These two candidates, like the presidential candidates. No. Am I the only one from the bond market's perspective that thinks they're relatively similar?
No, because if you were, the bonds wouldn't be where they are today.
I think if that was true, then as all these polls, like those polls are relatively right around 50-50. Betting markets went crazy. But I don't think you're going to see a normalization of bonds in the next 2 days. I just think both of these guys are going to spend $6 or $7 trillion or add it to the deficit. So who the hell cares?
I agree with you. And if depending on how the way Congress goes, it's going to even limit them more as to what they're going to be able to do. They're going to be spending a lot. They're going to be borrowing more. That's going to be a drag on bonds long term. But I don't see us getting back to the mid 120s at the bond. I think that's going to be a continuing weight. It's on bonds as we play through the end of this year. And last half.
I actually think more importantly, before we go too far down the bond path, because nobody has that's a very small. When we look at our customer positions, it's about 2% of our customer positions. So the real thing we should be talking about is the stock market, because the stock market is 90+% of our customer positions. So
fair enough.
Or 85% of our customer positions. So that's really where we should be focused on. And the question is, what does the stock market do? And that's going to be the fun thing. That'll be much more emotional.
And basis that, which way are you leaning then?
I'm leaning to the downside in the stock market only because I feel like we're priced to perfection where we currently are. I mean, I just feel like we're priced, everything's been priced fairly rich. I can't find very many sectors or stocks that I think are, cheap relative. I mean, how much Boeing do you want to own?
Rivian,
yeah, right.
The usual pigs, yes.
Yeah, I just can't find. How much Moderna do you want here? There's just I can't find that many stocks.
Even Peloton's rallied. Yeah, I know.
Yeah,
Palantir's super expensive.
Yeah,
everything's super expensive. Every technology play is super expensive. I mean, there's nothing out there that I feel like, I mean, do I think we're crashing? Of course not. Do I think we could have a couple of percent, pullback, which is, I mean, why can't we have a 5% pullback or a 10% pullback? Why not?
I think we do it from higher levels, though. I think if we get the rally in bonds and we get the uncertainty out of the way, I think even if they trade lower, there's going to be an inclination to buy them, and I think there's going to be better levels to sell them at some point on Tuesday, Wednesday, or Thursday.
You might be right. I mean, you could be right.
Just because
Victor, someone, James, Matt, take a screenshot or a video chat of, I might be right, and just let me have that as a little video collectible, because I can now die happy. I'm going to be buried with that, and that's going to be it. I'm good now.
Okay, only because Iowa is front and center with that Belter poll over the weekend at Harris +3 and the WASDE report on Friday. I'm just going to ask this question, but if you have no opinion on the grains, then just tell me. But are you interested in any way in corn, wheat, or soy this week? Or not
yeah, I have positions in all three, but not because I think it's it's an election play, just because I think the juice in there is kind of high.
That's just what in the biz. That's what we call an intro, Tom. I was just trying to get us to the topic.
I mean,
corn's cheap again. So
yeah, but that's like, okay. Thanks, Victor. You hit the 3 people listening that trade corn. Good job.
All right, thanks, Pete.
Like you don't want to cover Tesla, Nvidia, or Apple, but you want to talk about corn. Yeah.
That's coming up next. We got to come out. I'm throwing pitches right to Pete's wheelhouse here. Why not? All right. Okay. What do you think about Tesla, Pete? Is it going up or down?
You know what? Again, stocks like this, I think, are a little rich. So I'm tending to want to play a little bit from the short side. Nvidia is a little rich. I'm wanting to play that a little bit from the short side. I know they are putting what are they putting in? They're taking Intel out of the Dow, putting Nvidia in. I don't think you'll get a little bit of rebalance on that, but not much of one. That'll be baked out right away. This is a stock to me that has a lot of good news priced into it. But they tend to run a little bit longer, a little bit higher than everybody thinks. And we've kind of had that second charge up to the new highs. This is one, too, that in a zeal, if we get the 150, 152 print, that's interesting. I don't know if we're going to get that. If we just sit here towards the end of the week and nothing rallies, then people are going to pull stuff off the table. And then I wouldn't mind leaning short. There's nothing I particularly want to buy down here, though.
Let's jump to Ilya. Thanks, Pete.
All right. Thanks, Pete.
You bet, guys. Have a great night.
Thanks.
Gentlemen.
You are ready. Wham, bam, thank you, ma'am. It's Tom Sosnoff tonight. What's going on, Ilya?
Hey, you got to keep things moving. People, this is 2024, millennial boy.
You're like the Sandman at the Apollo, bro. Like,
you got to keep
my guy.
Haven't you ever been to a show at the Apollo or a show at some comedy club? They don't sit there and let the comedian linger on for an extra half hour telling them, hey, how was your dinner? They're like, get off the stage, kid, and let's get to the next person.
Ilya Spivak, look into your crystal ball, man. What's important this week, in your opinion? What's overpriced? What's underpriced?
I think actually the direction that you guys are looking at it jives with the way that I'm looking at it here. I don't necessarily have all of the same exposure. I think the stocks are where I think the situation is clearest, and I've been holding put verticals here for a while, so I've been short. It's working finally. It was sitting there doing nothing for weeks, which was kind of annoying, but now I think it's on, and I think the reason it's on, I think everybody kind of wants to say that the stock market is going to do X or Y because XYZ candidate is going to win. I think it's a little bit simpler than that. I don't think it's about any policy or anything. I think it's likely that Harris, in my mind, wins. It's likely that she at least outperforms, and the more she outperforms, and the more likely it is that she wins, the more likely that there is uncertainty, because if you had to pick and I told you, here's a candidate that contested this election, name which candidate, it's much likelier to be Donald Trump than Kamala Harris. So if she wins, he'll contest it, and then there'll be a process. And in my mind, if she wins by a larger margin, it's only likelier that he contests it because the polls are so tight. So I think that might extend it, and the markets don't like uncertainty. And it's that simple.
I think if you're listening to Jamie Raskin, as long as it's a tight election, it's going to be contested on the losing side no matter what. But to the question, what areas of risk do you like outside of? So it seems like you're playing the downside on the Nasdaq.
So I think, so I think that there is uncertainty that stocks won't like, I think is the easiest thing for me to imagine. And so I'm short. I'm holding short. I have Nasdaq short. I have Dow short. I have European stocks short. FEZ, the ETF. That's the Eurozone stock index. I have that FEZ. I have that short. So I have those. I'm actually short the bonds because I think what happens here, if there is uncertainty, is there's a little bit of a sovereign risk premium that goes into yields temporarily. I don't think it's a big move. I don't think it's a lasting move. I don't think we're running away anywhere. But I think as an election initial response, if there is uncertainty, yields go higher.
Yeah, that's a good point.
And that doesn't mean that the U.S. is a credit risk or any other nonsense like that. I just think as an initial reaction to uncertainty, that occurs. So I'm short the bonds a little. I took off all my dollar longs last week and the week before.
Whoa!
I put on a little bit of pound back on, so I'm a little bit short the pound, which had an awful week last week and seemed to break down. So but that's it. I don't have any other dollar exposure.
Are you flat the dollar, or what do you think about Tom just outright shorting the dollar?
I don't think that I would not be shorting the dollar at all, because I think yields might go up a little. I'm a little bit short the pound, which I just put back on, but all my other dollar exposure that I had from essentially early October, I've taken that off. I've booked out of all of it. So I'm a tiny bit long dollars.
To get you caught up, then your last one then on crude oil. You have an opinion there?
I'm a little bit short. I think as long as you stay under that axis at 72, the bias is lower. And so far, we're kind of begrudgingly making lower highs and lower lows. So I'm a little short. I'm also fading gold. I'm a little bit short gold. I think that one looks like it's gotten overcooked here.
Yeah, some part of me thinks that is election dependent. Somehow I see if Harris wins,
I think crumbles. So. Yeah. I think basically all of this hinges on my idea that the election is going to bring with it uncertainty, that uncertainty is going to go into yields, and that higher yields will mean lower bonds, lower gold, a little bit of a stronger dollar. It all kind of follows from this idea that the markets are going to be on tenterhooks with sovereign risk. And maybe it happens before. Maybe it happens going in on Monday and Tuesday. But I think there is, as you get closer to 50-50 ahead of it, you're just going to have a little bit of sovereign risk that goes into the bonds still. And so that Tom, emanates all over.
So, Tom, let me ask you this question. I asked you this, I think, a few weeks back. I'm going to ask it again. Whatever people are fearful of, they hedge for ahead of time. It's not like they're just going into this thing saying, I'm going to hope for the best. So regardless of the outcome, why wouldn't we see, in your case, a bond normalization, a selling out of hedges or put protection, and a smashing of volatility? And why wouldn't that just be fuel for an upside rally or an upside melt up after the uncertainty becomes certain?
Well, it certainly could. I think that, I think you guys are, I think what's at issue here is the term uncertainty. So I think there's going to be an election winner on Tuesday night or Wednesday morning, whatever, Tuesday night. And the idea that it's going to be contested is like a professional sports team protesting a game after they lost. Mm-hmm. It's like you don't overturn victories. It's all bullshit. It's just to make your own ego feel better, or to stroke your own base or whatever it is. There's no such thing as overturning an election. And there'll be a winner decided. Any kind of conflicts or uncertainty it'll just be hot air, and it won't really mean anything. And the next 2 days, Monday and Tuesday, you're going to see a lot of positioning. So you're not going to see an incredible amount of depth in the market. You may see a lot of liquidity. I don't think you're going to see a lot of depth. I think you're going to see a lot of, a lot of gamesmanship the next 2 days. I think tomorrow, the Nasdaq's going to open strong only because Nvidia is probably going to be up like $4, $5, $6, $7 tomorrow morning going into the Dow. So that's going to give the Nasdaq a little bit of boost in the morning. It's going to give other tech stocks a little bit of a boost, but the rest of the market, people are just going to be positioning. I mean, listen, should it really matter to Nvidia who wins the election? Of course not. Should it really matter to most of these mega monopolies who wins the election? Nobody's going to mess with them. I mean, you can't mess with them. They're bigger than everybody else. And so what happens is, the indexes will take over. And I do think you're going to see a volatility crush, but I also don't think I think you can easily see a volatility crush with the market giving something back. I think the biggest risk to this market, if you're talking about velocity risk, is to the downside. It has nothing to do with whether or not I think the market's going up or down. I just think the velocity risk is the downside. I think it's going to go up much slower than it's going to go down from here. And then, and I feel the opposite in bonds, and that's all there is to it. I don't really think there's much else. I don't think that the next 2 days, either Monday or Tuesday, there's going to be much to do. You might be able to scalp a little bit. You might be able to play the fact that it's a little bit illiquid, and they're going to be, and everybody's going to be positioning and posturing and maybe tightening up their positions. But I don't see, much of anything. You're not going to get a read from the next 2 days on what's happening in the election. You're just not going to get a read.
I agree with that.
Yeah, there's gonna be nothing's gonna happen like tomorrow. You're gonna go, oh, this means that Harris is winning. Oh, this means that Trump's winning. No freaking chance. You're gonna have no idea. And
nobody's gonna jump out and say I have conviction, and that's gonna be a market wide thing where the market goes, I have conviction in a trend in the indexes or gold or dollar. That's right. Not gonna happen.
The whole conviction play here is where do you think you get more bang for your buck? That's all it is.
Yeah.
Like if it's a 50-50 shot, if you're truly flipping a coin, where's the most bang for your buck? If you think, Vic, that the upside gives you the most bang for the buck, then you play the upside. I think the downside gives you the most bang for your buck, so you play the downside. But I have no idea. I agree with you. You're going to be fighting contracting volatility. Although it has the forward curves change a little bit, you're still going to be fighting contracting volatility, no question about it. Mm-hmm. And although there are multiple elections in 2000, 2008, and in 2000, 2008, and 2016, so basically every 8 years, and this would be the 8th year, where you did not get contracting volatility after the election. So you have 3 elections out of the last 6 where you did not get contracting volatility after the election.
Hmm. Ilya is not long dollars. I don't know what to do with myself. Ilya, I'll probably give you a call and ask you 3 hours worth of questions after this, but we're going to keep this show tight for Mr.
I'm still bullish dollars, but it's had its
just
move.
Not here.
It's had its move for a bit. I need better risk reward now.
Gentlemen, I say this every week, but you're my best friends. It's great to see you guys again. Great to see you guys again. Everybody else in the chat, hit the like button. For Ilya Spivak, Pete Ballmat, Tom Sosnoff, and the whole crew here at Tasty, I've been Victor Jones. We'll see you back here bright and early tomorrow. See you, everybody. Peace.
That was good.